Well, Asian markets, they have started off the week on a positive note as the US president has announced a delay in tariffs in terms of the hike against Chinese goods. So that was pretty good news. Most of those markets had opened up in the green. The Nikkei, in fact, is still holding in the green with a gain of close to around 0.7%. The dollar yen is well closer towards the 111 odd mark. But the Kospi had opened up in the green. And that's come off a tad bit from the high point of the day. So let's pull up the Kospi. I think the last time I checked it was more or less flattish, and it's holding more or less flattish. And the Taiwanese index as well as the Straits, they just opened up a few minutes back. So let's get the initial rates up for you on the screen. Well, green on the screen, though you have the Straits that are holding very, very marginally in the green. SGX Nifty as well. Remember, we've had a bit of a run from the recent lows of around, maybe around 180 points odd. But a stable to a mildly positive start is what we're bracing ourselves for.
Well, let's move on. And in some positive developments on the trade talks front, US President Trump says that negotiations with China have been very productive and that he would delay increase in tariffs. He tweeted, and I quote, "I'm pleased to report that the US has made substantial progress in our trade talks with China on important structural issues including intellectual property protection, technology transfer, agriculture services, currency, and many other issues. As a result of these very productive talks, I will be delaying the US increase in tariffs now scheduled for March 1st. The president also tweeted he would hold a summit meeting with Chinese President Xi Jinping at Trump's Mar-a-Lago estate in Florida to finalize an agreement, assuming both sides make additional progress." And on that note, let's hear out what experts have to say on trade talk developments.
Even back in December, the dark days of December, when Xi and Trump were not going to meet before the deadline, everybody was very concerned. But you saw the economy start to slow in the US, so the US was not immune to the trade war. And I think that was what changed the rhetoric and changed the pace and the direction from the US.
It should be in the sense that a trade war, a bilateral trade war between a deficit country such as the United States and China, over the long run, the effect on the US dollar and hence emerging markets is ambiguous. But over the short run, for a deficit country, is actually pro-dollar through the trade flow effect. So yes, we should start to see a little bit, although we'd already started to see this already, weakness in the US dollar, particularly against EM currencies, which should provide a windfall there. And we've seen that to some degree over the course of the last 6 weeks.
Trade deal hasn't been entirely priced in. My view is that the majority of what the market has done is based on two things, right? It's based on resolution of trade, and it's based on the Fed remaining relatively dovish. I think what's been most interesting is if you've watched volatility during this whole period, right, it's come right back down, and that Fed put feels like it's back in place. Now, the Fed has been adamant that the Fed put is not in place, but their actions and their words are signaling two slightly different things. So I think the key thing for investors to focus on this year is really policy, right? Trade policy on the one hand, Fed policy on the other. There's going to be a tug of war between those two because, again, if we get resolution on trade, I think the Fed's going to want to hike rates as long as the economy isn't slowing too quickly, which obviously, given some of the data we've gotten over the past couple of days, is a risk, but not one that we see playing out over the full 2019 year.
We are actually quite optimistic that at some point here, maybe as early as early summer, we'll actually reach resolution of the trade deal, of the trade war between the two countries. We'll see exactly how that works out. One of the things that we're looking for in the near term is whether or not this trade deal comes to an end, this trade war again comes to an end, is we think that we'll get a bounce in activity in the near term, and that will support confidence.
Well, let's talk about the US markets, where stocks rose on Friday as another round of trade talks between the US and China boosted investor sentiment. The Dow Jones gained 180 points and broke above 26,000 for the first time since early November and posted its 9th consecutive week gain. Again, the Nasdaq Composite advanced almost 1%, while the S&P ended over 0.5% higher.
All right, then, and turning attention to the European markets, they closed slightly higher on Friday following optimism on trade talks between the United States and China. On the data front, well, Germany's business climate index slipped to 98.5 this month. That's the lowest level, by the way, since December 2014.
On a quick programming reminder, CNBC-TV18 launches a special initiative in partnership with the National Stock Exchange on 25th of every month. We tell you how investing in stock market or equities makes one financially disciplined. This is a monthly program to inform and educate investors about smart investing and enabling the journey to wealth creation. Catch our special coverage all through the day only on CNBC-TV18.